Hey everybody, I'm here today to talk to you about how car insurance rates are determined. This seems to be a popular topic because everybody wants to save money on their car insurance, but nobody seems to be able to do so. So I'm going to tell you about the factors that come into play with regards to car insurance rates, and then you can use those factors to improve those factors on yourself and therefore hopefully get some cheaper car insurance. Plus, it just seems to be an area that everyone's interested in. So let's get right into it. These are the factors, the main factors that come into play when insurance companies determine your rate, okay? Now, there are many factors, but these are the main ones. So your risk as a driver, okay, that's the first factor. That's probably the most important factor. Your risk as a driver. How likely are you to get into an accident, which will end up costing the car insurance company money? Your risk as a driver, and that is determined by how many accidents you've been in, your age, your gender, how many tickets you've gotten in the last number of years, what those tickets were, but they're all encompassing into your risk as a driver, okay? The second factor is the cost of replacing your car or the cost of repairing your car. Obviously, if the insurance company only has to pay $100 to repair your car, they're going to charge you less than if they have to pay $100,000 to repair your car, right? Their rate is going to be conducive to how much it's going to cost them if they have to repair your car. So that's the second factor. And once again, there are a wide variety of things that come into play there. And the third factor is going to be the likelihood of your car getting stolen or something happening to your car when you're not in it, let's say, right? So let's break down those things. The first factor seems to be your risk as a driver. So what is your risk level as a driver? How many tickets have you received recently? Because if you receive more tickets, then obviously you have a higher risk factor. What were those tickets? Because, there are tickets that aren't that bad and there are tickets that are absolutely horrible. And also, how many accidents have you been in recently? Because the number of accidents is going to depend. It's going to allow them to know if you get into more accidents, you're a more risky driver. It's as simple as that, right? So your risk factor as a driver, what is it? Okay, the more risky that you are as a driver, the higher that your rates are going to be. Because insurance is a business, they need to make money. So if they're more likely to pay for your car replacement or for your injury, for whatever the case is, then they need to charge you up front for that so that they know that they're more likely to make their money. The second factor, like I said, is how much it's going to cost them to repair your car. If you're driving a cheap car, it costs them very little to repair it, then they can charge you a lower rate. If you're driving an expensive car, a luxury sports car, if it's going to cost them an arm and a leg to repair it, they're going to have to charge you a higher rate. It's as simple as that. They're a business. They need to make money. They need to be likely to make money. So if they're more likely to pay more to repair your car, they have to charge you in advance for that. It's as simple as that. The third factor is going to be the additional risk factor, which is, do you live in a rate where there are a lot of cars being stolen? Is your car stolen a lot in your specific area? Is your car likely to catch on fire or get damaged or whatever the case is? Your likelihood of something happening to your car when you're not inside of it, that's going to be the third factor. Now, when you bring all of those factors together, the more risk that you have within those factors, the more that you're going to have to pay on insurance, because insurance, especially car insurance, is a business. It's a very lucrative business at that. And the insurance companies need to charge you an amount that is going to allow them to be more likely to make money. And all of this is done with a calculation algorithm based on a computer, but if they realize that, when they're insuring you, if they're likely to pay out $20,000 in 10 years, then they need to charge you, let's say $25,000 in 10 years. They need to charge you more money than they're likely to pay out. This way, at the end of the 10 years, they've made a profit. Now, some drivers will end up making the insurance company a profit because they're going to pay for insurance for year after year. They're never going to get into an accident. They're never going to need any money from the insurance, but they're going to keep paying for it. Other drivers will cost the insurance companies money because, they're paying a certain amount, but they're receiving more money from the insurance company over the years because they've only paid, let's say, $5,000 and they've received $10,000. Now, the insurance company companies look at it as an overall business. So if they're going to lose some money with other drivers, they need to make sure that they make money with other drivers. It's as simple as that. That's how car insurance rates are determined. They're determined based on your risk factors and the risk factors of your car and the value of your car. When you bring all those together, that's how the rates are determined. And that's it. If you like this video, be sure to give it a thumbs up. Let me know what you think down below as a comment. And of course, be sure to subscribe for more great car and driving videos just like this one. And that's all I have for you today. Thanks for watching.